Nowadays, you can do real-time payments. You use wallets. Everything is instantaneous. I just did a transaction on my Truist account, and boom, money went out. I was like, wow, that's really fast.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hi, welcome to Wrestling Payments. My name is Joe Casali. I will be your host today. I'm very excited. We were just meeting off camera, talking about what the podcast was going to be about, and there's so much ahead. It's going to be very exciting. I just got back from a meeting yesterday from the Faster Payments Council, and when you talk to the Faster Payments Council, we're talking about instant payments, real-time payments. It's only one hair away when all of a sudden we start talking about these technologies being cross-border payments. Let's talk about cross-border. The current systems don't do cross-border. So today, I have a very special guest. I'm not going to even ask him my wrestling questions because this is a very special guest.
I don't know anything about wrestling. Sorry,
excellent.
Joe.
There's problem solved. John, if you could introduce yourself and the company and what you guys focus on.
Sure. My first name is John. My last name is Min. I am a PhD economist. My area of specialty is productivity, how to improve companies, but I've been working with Monex for the past 8-9 years as their chief economist, and I do macro analysis. So if you want to know whether you should hold on to NVIDIA or get out, I'm the guy, because I try to see where the economy is going 6 to 9 months ahead, whether it's going to bend this way, it's going to go that way. And then we provide that as an advisory service to our clients. And second time, the Monex, we are international financial institution. We have Monex US, Monex Canada, Mexico, Asia, Europe. Put it all together, we're about 3,000 folks, and we focus on one thing only, which is we're very good at taking one money and convert it to another money. So FX conversion. And we are also very good at sending that money or transfer that money to 154 different countries or the markets. And because we're specialists, we're very good at it and we are very efficient. For example, all our wire transfers, let's say, they settle within 24 hours. Half the time is the same day. And then our pricing is super competitive. But we're not a bank, so we don't compete against the banks. So our salespeople, first thing they say is, we're not a bank. Your deposit stays with your current FI. Everything stays the same. You only consider using us for cross-border payments. And by the way, Joe, I'm not surprised by the cross-border conversation at the Faster Pay Council, right?
Faster payment, yeah.
Yeah, because what's happening based on our survey is that the customers get spoiled on domestic side of the market, because nowadays you can do real-time payments. You use wallets. Everything is instantaneous. I just did a transaction on my Truist account, and boom, money went out. I was like, wow, that's really fast. But now if I want to do cross-border payments, some of the FI is required to come to the local branch. And we actually had a person told us last week, not only they had to drive to the local branch, they had to fill out a form to transfer money to their supplier in UK. And here's the part that I think is against the Dodd-Frank. He didn't know how much it was going to be because he had to wait for the confirmation or until the account got debited. So he had to put extra cash into his operational account just to make sure it got covered. So there's a huge disconnect. Yeah.
Yeah. Let me ask you this. So as we were talking earlier, when I think of my everyday life, and I live in Massachusetts, which I think we're doing a lot of international, I never think of that part of banking and business. Can you talk a little bit about, for folks who aren't aware, that there's a lot of, imports, exports that need to be paid for. Can you scope that issue? You said you're in 49 states. Talk about that.
Yeah. So we're in all 50 states. In order to operate, we need to get a state banking license. We're fully regulated, audited, and we got to maintain performance bond in various states. So in many respects, we kind of joke around, we're actually safer, more secure than with the banks, because with the banks, you're the licensed national estate. We're at the both levels. That's number one. Oh, by the way, only reason is 49. I believe it's Montana is the only state that doesn't require state banking license. That's that. Now, in terms of the import, export, cross-border payment business, I'm a super nerdy numbers guy. So if I go from top down, roughly about 15% of the U.S. economy is international, either import and export. That's one way to look at it. Another way to look at it is there are about 250,000 registered importers scattered all over the United States, according to U.S. Census. That's like 1% of all businesses in the United States. But then 95 to 96% of the manufacturers, they buy supplies from overseas. It may not be the major supplier, but they do import parts from overseas. So that's roughly about another 600,000 businesses. Put it all combined, if you have about 100 businesses in your market, in your area, 2 to 3, 4, 5 are actively involved in cross-border payments. Now, for those people who are more in tune with how much revenue potential is possible, according to McKinsey in U.S., we're looking at about $60 billion. That's the size of the pie.
60 billion.
Yeah. And then there's super cluster centers, I call it. These are retail. What I just described are just businesses. Retail these are people just walking into a branch. My son is studying in Cambridge. I need to transfer money to. I'm an expat. I'm working in the United States. I need to send money. I need to pay for my mortgage while I'm buying a villa, whatever might be in Europe. Or, now big thing is Asia, Mexico and Canada. I need to send money to Canada. I need to send money to Mexico. When you put that together, we're looking at a significant amount of business opportunities, but they come in clusters. So if in Washington, D.C. is a big cluster, that's no surprise. But North Carolina, Research Triangle, there's tremendous amount of retail business. Huntsville, Alabama, there's a lot of individuals doing wires. San Jose, California is one. And I just found another super cluster in the United States, Wichita, Kansas.
Kansas, really? This is fascinating.
Kansas. Well, that's because there's so many international engineers involving aerospace. So they're sending money back and forth for personal reasons. On top of that, if you put the businesses, I suspect that any FI who's listening to this podcast, there's a significant amount of cross-border business opportunities in the market. And if you don't see that in your internal business operation, it's because they're not coming to you.
So I have to stop myself because I just want to kind of listen to you. So let me ask this. So we were talking before, and it is not, I'll use my words. You can definitely use your words. It's not a level playing field. Not every institution has the same buttons and machines and all of that. Can you talk a little bit about that?
Yeah, so I believe there are 4,400 banks. That's the latest account. Out of 4,400 banks, 20 are what I call the first-tier banks. They do their own foreign exchange, cross-border payments. They got the infrastructure that tap into SWIFT and whatever might be. What that implies is that most of the FIs, community banks, regional banks, credit unions, they're not doing their own cross-border payments. They're outsourcing it to so-called correspondent bank. And right there, it causes tremendous amount of problem because you're servicing a business like a wine importer in your area who imports a container of wine every other month. Each container is about $30,000 to $40,000 worth of wine if you're getting it from Europe. Your payment has to be made. And now that person comes to your retail branch, or they call in, or they do it online. Well, that transaction is now outsourced to your corresponding bank. And the corresponding bank, based on their cutoff, their batch system, there's automatically 1 day delay or 2nd day delay. Additionally, the corresponding bank doesn't care about the pricing on exchange rate because a lot of people don't know all conversions, as we call it FX conversions, they're over the counter. That's the technical term, over the counter. What that means is they're negotiated. So whatever corresponding bank says, we're going to mark it up 1%, 2%, 3%. That's the price. By the way, in the United States, typical markup by correspondent banks is up to 3 to 4%.
Can you dig into that just for a second? My daughter went to Italy, and she did go to Italy, but I'm going to pay for her hotel, and I need to do it right now. I'm going to do it. How does that transaction work? And I work with a very local institution. How could that work?
Well, so here's my advice. If you're doing small transactions like that, credit cards are okay, except there's a markup in the conversion rate charged by your credit card.
Yeah.
That's anywhere from 2 to 3%. Unless you have a very special credit card, but your annual fee is like now $800 a year, whatever it might be, maybe 1.5%. But that's fine if you're paying for like $300-400 worth of euro.
Sure.
But the wine importer,
Yeah.
whose invoice is 30,000-40,000, paying 2%, 3% on that, that's significant. So they don't use credit cards. They want to send a payment.
And that's happening at the time, right after he filled out the form, if you will.
He'll filled out the form. What happens usually is you don't even know as a business person how much it's going to be until you get the confirmation.
Mm-hmm.
Because the bank cannot tell you unless the corresponding bank comes back and said, this is how much it's going to cost. If that's the type of relationship, so they're literally saying, this is what I need to send. Let me know how much it's going to cost. Corresponding bank marks it up. It's not their customer, so it's not going to be competitive pricing. And transaction gets done. And now you get the confirmation. At that point, there's nothing you can do about it. Mm-hmm. And then, of course, a lot of business in the United States, they're captive to their bank, because if you want to do cross-border payments, where do you go? You go to a bank.
Right.
In Europe, there are many, 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 many more companies like us, because I don't want to say Europeans are more sophisticated, but when it comes to foreign exchange, they're more aware. It's just they're used to it, because they go to Switzerland, they got to convert. They go to Poland, they got to convert. Mm-hmm. United States, we think everything is done in dollars. And if you need to do any type of financial transaction, you go to your FI. And reality is most of the FIs in the United States, they don't do foreign exchange. They outsource it. So really the entity that's making most of the revenue, taking advantage of this type of system in the United States, are these big 20, maybe top 10 banks. And their revenue on the foreign exchange is very significant.
I'm not going to be creative at all. You were mentioning a couple of studies that just came out about the rates that these 20 top guys can charge versus the everyday bank. Can you talk a little?
So again, I'm a nerdy economist. I get the regular studies published by NEBR. That's the National Economic Bureau of Research out of Boston. It's a conglomerate of Harvard and some of the schools in New England area. And one of this research, the peer-reviewed study that I will share with you after this podcast, is fascinating, because what they found is that these top 10 major money center banks, they have a unique advantage. In other words, what they found is for the same amount of deposit for their customer, larger banks offer significantly less yield or interest on that versus small FIs. The implication is, in order for smaller FIs to hold on to that deposit base, they have to provide more yield. So they looked into the reason why there is a delta. Markets should be efficient, and people should go. And what they found is that bigger banks can get away with it, or they don't have to pay higher yield because they offer more advanced, innovative products. So if you don't have a very efficient, up-to-the-market, industry standard services when it comes to cross-border payments, those local importers and manufacturers in your market, even the individuals who are doing significant cross-border payments, if you want to hold on to their deposit, you got to almost bribe them, provide them incentive by providing higher yield on their deposit. Now, other implication is those businesses will go to national bank in your market to open up an account, not because they don't like your service. It's not that they don't like your history with them. It's just that they need to send the wire out. It needs to get there fast. I need to know how much it's going to be. But here's the trick, or side of trick. In order to do that transaction through, let's say, Wells or Chase, you need to open up a bank account. Now, if you do, then I guarantee you that there's going to be siphoning of the deposit, because in order to do the transaction, you need to have cash in your operational account to cover for it. So now your deposit base is at a risk. So I think it's really, really important for smaller regional FIs to recognize it's not that you want to make money on the cross-border payments. If you want to defend and hold your deposit base and be competitive, then you need to keep up with the innovative products and services. That's why pretty much all the smaller FIs are going real-time payment and FedNow and things like that. But again, cross-border payments, they're far behind compared to big money center banks.
Yep. Our RTP and FedNow are not doing cross-border payments.
No.
And I don't actually see it on the horizon, but super interesting. I want to be conscious of your time. I also want to be. So for the listening audience, John is an economist. We could talk about lots of topics. I don't want to impose on him, but I do want to touch on. It's not going to be a stablecoin episode, but I do want to just touch on it, because I've always thought the easiest way for me to understand a cryptocurrency was to think of it as a different currency, right? Just like a franc or a euro. It was a different currency. There's an exchange rate. With the passage of the Genius Act, how do you see that affecting your business? Are you going to incorporate that?
If my answer is going to be based on what's going to be like 5 to 10 years, I think it's going to affect the industry significantly, because technology itself is beautiful. So by definition, with the Genius Act, the idea is that stablecoin is stable because it's backed up dollar for a dollar under trust. So the market, there's no volatility. It was very difficult to use Bitcoin as a medium of exchange because it just fluctuated so much. So as a business, if I'm going to pay you in Bitcoin, I may be overpaying you, underpaying you based on what's happening in the market. With the stable coin, I know it's almost pegged to the dollar. So it's fantastic. Right. Now, second part with the Bitcoin, it's a stable coin, I should say. If you're going to send stable coin to India, so we're actually looking into a case where you as a customer can sell dollars, fiat currency, buy US stable, USDCC, let's say, and then you send that to a wallet in India. So instead of taking 3 to 4 days to send funds by SWIFT with the markup exchange rates, this would be almost instantaneous transfer. And it's fully transparent from a compliance KYC, AML perspective. It's not only transparent, and the cost of doing a transaction is not going to be $50, $60. It will be a few pennies, assuming there's no markup to it. Only challenge right now that exists is that recipient of Indian rupee in my wallet in India, New Delhi, if I want to convert that to fiat, my local currency, so I can go to a local shop and buy my cup of tea, whatever it might be, not all financial institutions would be able to do that. So right now it's very narrow application. There are few financial institutions in India that will do that. But then it's not going to be as liquid. I cannot send stablecoin to China, Vietnam. We work with a lot of nonprofits and a lot of folks in Africa working on different NGO projects. They want to get paid in stablecoins. The problem is when they receive stablecoins, converting it to local currency, that's the challenge. But a lot of people want to receive their stablecoins because they don't want to hold on to the local currency if there's high inflation.
So I think of this all the time, and you just gave a great example of it. So everything's connected, right? Yep. Everything's connected, but different, right? And stay with me for a second. I know I sound a little weird right now. The idea of a stable coin is wonderful. You know, I'm going to exchange money from a wallet to another wallet, and poof, it's there. It's like magic. It's there. But when you get into the reality of well, in India, here's the facts and the you may not be able to transfer it. In China, there may not be a market to you'll have a wallet full of stable coins,
What are you going to do with it?
Won't be able to do anything with it. Can you talk a little? I was just on the edge of understanding, following your story. Can you visit that again as far as the intricacies of a country and how stablecoins work or don't work, or even is that true with dollars as well? Would in India would there be a challenge exchanging dollars and rupees?
No, because pretty much all the financial institutions in India, they can convert dollars to Indian rupee. And that's true for China as well. Except in China, you have to give a lot of paperwork. This is mainly China, not Hong Kong. There is a CNY, CNH, two different Chinese currencies, right? If you send it to the mainland, the recipient has to provide paperwork to the government to say, I'm getting paid because of this. Because there is capital control in China. They want to make sure no money comes in and out with the government noticing it. Now, going back to stablecoins, there's a lot of demand for stablecoins, but if you actually look at the common profile, demand comes from countries with high rate of inflation, like Argentina. Although the inflation has come down recently, Brazil, Turkey, the suppliers over there want to get paid in stablecoins. And it makes a perfectly economic sense because when you get stablecoins, it's pegged to $1. I don't have to worry about depreciation due loss of purchasing power due to inflation. So I'm not in rush to convert that to local currency. In fact, if I'm buying something from overseas, it's better for me to use stablecoins to pay for it instead of using local currency to buy the foreign currency because my currency is depreciating by 12%, 7%, 8% every year. So if you look at it, that's where the demand is for the stable coin right now.
And that's not a new concept, right? Because
No.
before stablecoin, it would have been dollars or some other currency.
Exactly.
Yeah.
They pay me in dollars, right?
Yep.
And they don't convert dollars to local currency. If they're going to do it, they're going to do it the black market. You get better exchange rates, right? So it's the same process. Ultimately, the technology of stablecoin is so much better than the current network of messaging, which is really a SWIFT, right? 4,000 institutions almost emailing each other. Now it's gotten a little better with the ISO 20022. There's standardization in the fields and messaging. But again, it's just global commerce being run by, why don't you debit this and credit that for me? You debit this and credit that for me. And yeah, that's the pipeline versus fully transparent, instantaneous public ledger that says you own this, you own that, you own that, and there's a track record transparency. So technology is superior, but I think it's going to take a long time
And
to really
for
take
folks
over
who-
the SWIFT.
And for folks who don't understand, and this is again my interpretation of Swift, Swift is a message. It's not
a message
it's not a payment. It's not like cash.
No,
going
no.
through that
Cash
wire.
doesn't leave. Yeah.
Yeah.
Exactly. I'm literally sending a message to another bank, other side of the pond, other side of Pacific, and say, you have my money, debit here, credit this account in Tokyo.
All right. I know you have to go, but let's pivot right now for the problem. So the problem, I think we defined it pretty well. The problem of maybe having access to the tools or having an efficient. You brought me back to my economics days with an efficient market, but an efficient system to not only service the international payments we have today, cross-border payments we have today, but as stablecoin onboards. Could any advice for I like to think of my members, but financial institutions, the savings and loans, the community banks, on how to approach this problem?
I think the key word is partnership, but with the right partner.
Sure.
With the API technology and everyone going to ISO 20022, it's almost becoming a plug and play.
Right.
And literally as a FI, I can plug into the best in kind services and then put it all together and provide that level of super competitive, efficient services to your customers. So when it comes to cross-border payments, there's no reason why you can white label even our platform or our competitor's platform At Monex, we can white label a platform within 2 weeks. And
I-
then you
let
can
me-
just plug into API.
Yeah.
Then you can offer cross-border payments as with the service that's actually better than these money center banks. And here's the best part. Now, instead of just giving the transaction and let the big banks make all the money on cross-border payments, you can monetize your cross-border payment customers' transactions. And that could be significant because that wine importer I was talking about, it's about $30,000 a euro. You can charge about 2% markup instead of 3%, so you're super competitive. That's $600 worth of fee income. Forget about the wire fee. Everyone focuses on the wire fee. To me, that's like a petty nuisance revenue. Real revenue comes from the markup and exchange rates. And these wine importers, they import once a month, twice a month. So you're looking at $600 worth of recurring fee income coming from wine importer every month or twice a month, and multiply that by all the importers and manufacturers in the market. It's a significant revenue flow that's going to make a difference to your bottom line. That has nothing to do with the yield curve. That's the best part. Yeah, has nothing to do with the interest rates.
I pride myself on having a podcast that goes a little bit deeper. So I know in the past there have been logical things. The easiest one is in the ACH they implemented this IAT transaction. No, we're not talking about cross-border at all. Just they implemented this new technology, and they had to delay it because in the industry, the financial institutions were not up to date in their software releases. So all the cores said, our software does it, except all the financial institutions were behind. So they all had to upgrade to be able to take advantage. You said, if I can repeat it back, that this is with all the technology available today, it's an easy onboarding, given vendor management, onboarding, all of that. What's the difference between it's easy today, it could work, with they should do something about this? Because it's not a could, it's this is happening, stablecoins coming along, this is already, cross-border is already a big deal. You may not know about it because it's being taken care of over in that corner of the institution. We don't know what's happening over there. Any deep dive?
Deep dive. Under the hood, if you're using any core processor like Q2, Jack Henry, FIS, Pfizer, we're already in there. So it's just a matter of flipping the switch. That's easy. If you have any banking platform, then we can plug in our API and provide cross-border payments. So if you have a treasury management system from a third party, pretty much everyone, our standard fits there. So you're just adding a tab that says cross-border payments. When you click, you're literally coming to our platform at that point. It's a single sign-on. So seamless. That day, your customer doesn't leave your environment. And we do all the transaction, KYC, AML, everything else. The easiest way to do it is just white label our platform. And when the business says, we want to do cross-border payments, I don't want to come to your branch, or your services, it takes 3 to 4 days, your pricing is not competitive, you don't have the currency that we are dealing with. That's a big issue right now because, supply chain has moved out of China and has gone mostly to Southeast Asia, Vietnam being a hot destination, and Philippines. And now they're looking for Vietnamese dong, that's the name of the currency, Philippine pesos, and you don't offer that because you only offer G7, the common currencies. You can simply take our platform, white label it. It takes 2 weeks to white label. You put your logo, color, everything else on it, and you just extend that service to your business client, and they will just get on. They do all the transactions. KYC, AML, everything else is done behind the scene, and we do get audited by state banking commission, so we actually have a higher standard than most of the FIs when it comes to cross-border payments. And again, the best part, you monetize it immediately.
Right. Excellent. Excellent. Now, some housekeeping stuff. Do you know, I know you're speaking at our upcoming conference, Faster Payment Symposium? Yes, FPS. Are you speaking at our conference?
Okay,
you
so
are,
this
right?
is the podcast. I got my full schedule. Yes, I am.
And what would you be speaking on? Because I'm going to be in that session. I know. I don't know if people want to meet you.
It's going to be cross-border payment landscape online. I'm a keynote speaker.
Ta-da!
It's November 3rd, I believe,
Yep.
in Boston, right?
Yep.
And
Excellent.
then, and in addition to talking about the payments, I'm going to be talking about the U.S. macroeconomic conditions, because one of the areas my team has been looking at is how tariff is affecting our growth. And today was crazy. We only created 22,000 jobs. We usually generate 120, 130 jobs, 1,000 jobs per month. And the last 2-3 months, we, on average, generated about 30,000 jobs. So does that mean the U.S. economy is going to a recession? Is something else going on? And I'll share my research on November. How's that?
Excellent. Ooh.
Yeah.
Cliffhanger. Excellent.
No, I found some data that's very insightful. It has to do with the productivity. I don't know whether you noticed, the productivity has surged in the U.S.
I would imagine it has, because I think more and more people are definitely onboarding AI stuff, which is supposed to make it easier. I don't know anything else. Not an economist.
It surged after the COVID. So when we were forced to work remote, and then every business had to look at their own business processes, and we evaluate that. Ever since we got out of COVID, it's a U.S. on a steroid economy.
Excellent. That's
Which
awesome.
means we don't need to create a lot of jobs because our productivity is high. And of course, immigration is a big story.
Sure.
Last 2 years, we were getting 2 to 3 million immigrants a year. So we had to create 200, 300,000 jobs to absorb them. But now immigration is close to zero. So we don't need to create that many jobs. And if we're being smarter, more productive, the businesses don't need to hire as much. The good news, business is not laying off, because if you look at weekly jobless rate. So I may have a good news
Yeah. This is fascinating.
in November.
Excellent. Yes. Please come to the conference to get that news. Excellent. Thanks for joining me today.
Oh, it's a very nice meeting. You're looking forward to the conference in November.
Excellent. All right. Thanks, everyone.
On behalf of Nietzsche, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of Nietzsche.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.